Today we have EFG. EFG is a Swiss wealth manager. It's in fact a global wealth manager specialized on intercepting wealth, I learned. Now, on a more serious note, Giorgio is the CEO of EFG. He's been CEO since 2018 of the bank. It's one of the largest player in the international wealth market and represents a little bit how Switzerland is dealing with, wealth management. Now, wealth management sounds like, you have a private banker that, looks after your wealth like a family office. It's a bit a more complex business, but also it's a very dynamic business. And the reason it's very dynamic is because wealth is generated and is mobile globally. So if you look a little bit where wealth is being generated, you probably don't need too much help in telling you where it's generated. A lot is being generated in Asia, a lot is generated in North America, but then it's mobile, it moves around the world. And the wealth managers are the ones that are, helping entrepreneurs, billionaires, very, wealthy people manage their assets on a global basis. And it's going to be interesting to see a little bit how that market develops, the role of Switzerland in that market. You all know that financial institutions play a disproportionate role in this country compared to the GDP of, if you compare that with other countries. And so understanding a little bit how that market works is something that, it's a privilege to have you here, Giorgio. Giorgio has a master's degree in economics and business administration from the University of Torino. He then joined Deutsche Bank and worked in Frankfurt for many years. Then joined the EFG Group. The EFG Group had two banks. One was a wealth manager based in Switzerland or with the headquarters in Switzerland. And the other one was a retail bank based in Athens. So he joined the retail bank based in Athens, worked there and was responsible for international operations, and then moved over to the private bank, which he runs since 2018. And for those that read Swiss newspapers, and because most of you don't, I'll tell you, the NZZ am Sonntag, which is one of the two major Sunday newspapers, did an article on EFG during Christmas and New Year time, and it showed the stock price development of EFG versus all its competitors, and it has been nothing else than spectacular. So it's a big privilege to have you here and to learn a little bit about what's happening with wealth on the globe.
Thank you.
I'll pull back and I'll let you.
Yeah, thank you. Thank you, Claudio, and good afternoon, everyone. I'm very pleased to be here and actually very honored. And, I've, in the last few years, I've been given a lot of presentations to many stakeholders, but this is a first. It's the first time I'm actually at the university giving a presentation and be on the other side of the room. So let's see how it goes. Hopefully it's going to be pretty cool and you are going to find the presentation interesting. Now, as you can see here, the title of my presentation is Wealth on the Move, Leadership and Opportunities in Global Private Banking. I understand that this is a bit also in the context of the cross-cultural leadership. We are a global boutique, as we like to call ourselves, and this is my fourth working day in the new year, and I just came back from Dubai because we had a strategy session in Dubai the last few days about the NRI business, which is the non-resident Indian business, and Dubai is becoming one of the centers in that part of the world, and also we had a major client event, and so I just took the red eye last night and landed this morning, so maybe jet lagged, but this is part of the game. Now, I will try in the next 30 minutes or so to answer 5 questions. First, who is EFG? We are doing pretty well, but our brand is one of the topics we're going to discuss. We can still improve on our brand. So who is EFG? Where do we play? And answering the question, where do we play, I want to give you a bit of an overview of the trends that shape our industry, where wealth is created, where wealth is flowing, which is the title of the presentation, but also to give you a bit of the competitive landscape, not only in terms of the actors, so the banks and the financial institutions, but also in terms of the financial centers. I love this business because it has to do with geopolitics, macroeconomics, entrepreneurship, business, you'll see. The third question is, what have we done in the last few years? As Claudio mentioned, I took over as CEO in 2018, so this is my 9th year, and I'll give you a bit of a sense of what we've been doing the last few years. Many things went pretty well, and hopefully they will continue to do so. And also, I would like to give you a sense on how we did it, because maybe, to give you a sense of the key principles in terms of leadership and management that we have used. There was a lot of trial and error, but I think they worked out pretty well, and I think that's probably more interesting or very interesting for you, because I believe that certain key principles can be applied not only to banking or finance, but can be applied across industries. And then to answer a bit the question of what's going to be next. Now, obviously, basically, your age, I used to be a salesman. I used to be in a dealing room in Frankfurt. And so maybe we start with a video just to show who is EFG. It's a bit of a sales pitch.
EFG International has developed from a startup to a leading Swiss private bank in just 3 decades. Our journey is all about entrepreneurship and innovation. Since Geneva-based bank Gallen was acquired by the Nazis family in the 1980s, this entrepreneurial mindset shaped us. With over 40 locations worldwide, we have a truly global footprint. This ensures that we always stay close to our clients and understand their needs. From New Zealand to Miami, regional experts can learn the know-how from the global network and expertise. As a pure-play private bank, our clients are at the center of everything we do. We support their financial needs at every life stage. We know that top talent is key in our people business. Therefore, we strive to be an employer of choice, with corporate values embedded in our daily operations. At EFG, everything starts with our clients' goals, needs, and ambitions. Our CROs are the first-class investment in client solutions. Their focus is on building long-term relationships with our clients through customized, impartial advice. At EFG, there is no one-size-fits-all. We provide our clients the freedom to choose what suits us. Over the past years, EFG has consistently delivered sustainable and profitable growth. Our global team and well-diversified business model have generated significant value for EFG stakeholders. As a publicly listed and family-controlled bank, EFG has a longer-term planning perspective, allowing us to seize opportunities at the horizon. At the same time, our robust compliance and risk management framework remains essential for our continued success. With a strong balance sheet, EFG maintains strong liquidity and capital metrics exceeding regulatory requirements. We remain committed to our purpose, empowering entrepreneurial minds to create value today and for the future.
Very good. So I hope you have a bit more of a sense of what EFG is. If we go back to the presentation on page 4, I will not repeat what we have already mentioned. The only point I'd like to make here is that we are, as you can see on the top left, let's see, the top left, we are, our business is very global, is very international. We are present basically in all continents. We don't have a physical presence in Africa, but we have clients and business from Africa, and by the way, from London, Dubai, and Switzerland, we cover Africa. We have 40 locations worldwide, and we are present in the most important international financial centers that are about a dozen, and we have about 300 colleagues. Now, am I doing something wrong? More.
Yes.
I moved. Okay. You have seen already in the video a bit the history. The only point I'd like to make on this slide is that, and this is, in my view, one of the beauty of finance and banking, is that in Switzerland, private banking is a very or relatively old industry. If you take Pictet on Lombardier, they were founded when Napoleon was still around and winning wars. Pictet was set up in 1805, and Lombardier even in the 18th century in 1796. We were the first investments of the Latsis family, which is based in Geneva, but of Greek origin, was in 1980, but basically the first 15 years, not much happened. You know, sometimes some startups take a bit longer to move. And then from 1995, we had a fantastic run. We went public in 2005, and then we had our fair share of issues like most banks after 2008 and the great financial crisis post Lehman Brothers. And then we made a major acquisition 10 years ago in 2016, and this doubled basically our size, and this is when then the journey started, and we'll go in more detail. Wow, it works. You heard about the CRO model, and CRO doesn't stand for Chief Risk Officer, but stands for Client Relationship Officer. Other banks call them relationship managers. For us, this is a bit our unique, you know, what we stand for is a bit of a unique selling point. The key point here is that we are extremely client-centric, and every bank will say that. We are extremely client-centric because we are CRO-centric. And this means that for us, the RMs, the bankers, the client relationship officers are partners, are not salespeople. They have no targets, no budget, no product objectives, nothing. They have to cover their clients. They need to grow. You will see the targets afterwards for the bank. They need to grow, and they need to obviously to make sure that they bring a decent return home, but without selling pressure. And you might have seen in the newspaper that some bigger banks still adopt the selling practices that I used to have 25 years ago when I was in Deutsche. And the key for us is the long-term partnership with the clients, and obviously we want to deliver truly personalized and impartial service, and we are open architecture, which is another important point, i.e. we do not manufacture a lot of products. We take the best of breed from the products that are in the market.
That's a good marketing. I'll turn them. Just tell me when to turn, I'll turn them.
Yeah, okay. Now okay. I got this. Now, I've been basically 30 years ago when I started in this business, I started thinking, and I learned it at the time, in 3 dimensions when I want to talk about strategy and define what we want to do in terms of business. And the 3 dimensions are clients, the offering, and the distribution. And here you have the clients on the left-hand side. Now, our clients are wealthy clients. Private banking is about wealthy clients. The ultra-net-worth individuals is about 50% of the assets under management. They have with us more than 30 million Swissy, which means that probably they have around 100 million of liquid financial assets. And the other 36% is between 3 and 30 million, which means a net worth between, or liquid financial assets between 10 and 100 million. So these are the same clients that had made in Europe. LVMH, one of the most successful companies in Europe, have made Arnault the richest person in Europe. And so very often I say we do not compete with other banks, or we do compete with other banks, but not only, we compete with the experience that these clients have in the other sectors, which is the luxury sector, from hospitality to luxury goods, etc. On the other hand is what we offer. I think here also our mantra is to give to the client choice. There are many banks that focus on one specific element. Some banks only focus on investment solutions, which is, for example, discretionary portfolio management or advisory. We like to give wealth solutions. It's all about succession planning, estate planning. We have a trust business in Jersey. We have private label funds in Luxembourg, in Jersey, in Singapore. We have credit solutions. We give credit. Credit is important. I mean, these are the people that really do not need credit, but actually they love to leverage for a variety of reasons their assets, both real estate assets and financial assets. And many clients still like to trade, and so we give them access to the dealing room in Hong Kong and in Switzerland to trade. Since the war in Ukraine 2022, commodities and FX, for example, have been extremely volatile. Many people 5 years ago said they are dead as asset classes. Now they are back. And so we try to give the biggest platform possible to our clients. Next slide. Here, we already mentioned we are across the world. We can move on to the next slide. So where do we play? This is quite interesting because, as Claudio was mentioning, I think that the underlying trends in private banking are quite interesting. This is on the back of our Investor Day that we did on the 25th of November. We present our strategy for 2028. And when we started preparing for that strategy was basically after Liberation Day. And then everybody started thinking, okay, what are we going to say about financial markets, equity markets, FX, fixed income, public debt, tariffs, and nobody had a clue. And believe me, many people still don't have a clue, and many people don't have a clue anyway. And so then we started reflecting, and the reality is that all this is obviously very relevant in the short term, but in the long term, there are only two questions that are relevant for our business, which is wealth management and private banking. Will entrepreneurs continue to generate and create wealth? And then where will this wealth go? Where this wealth move? And and for us, the two answers are yes and yes. Wealth will be generated in the next 10 years by entrepreneurs, and this, we will see in a minute, will grow faster. Wealth creation will be faster than nominal GDP. And second, wealth will move, and we'll talk about that. And so for us, the two key questions are, how can we intercept the wealth where the wealth is created? So proximity for us is important, and this is why we have 40 locations. And then you need to be in the international financial centers where this wealth goes, and we'll see in a second the slide. So if we go to the next slide, this is a simple slide that basically says that wealth will be generated. The only, you can see that Western Europe and Eastern Europe maybe less than in other regions, but obviously North America and Asia Pacific wealth will continue to be created. If we go to the next page, this is quite interesting. Wealth is created in many places, but actually millionaires, our clients are global citizens, they actually are very mobile, are citizens of the world, and they change. China, a lot of wealth is created in China, in India, but the wealth goes out. And where does the wealth go? It goes to Dubai, it goes to Singapore, it goes to Australia, it goes to Switzerland. Here there are millionaires. Many went to Italy because of the fiscal advantages, and they still go to the US. You see that in Brazil there is a lot of wealth creation, but people take the wealth out. And this is 2024, so before the new administration, so a lot of people still went to the US. And we often say, actually it was my previous boss, John Williamson, that used to say that private banking is a form of geopolitical risk diversification. If we go to the next slide, this is trying to do the same thing, but projecting for the next few years. And you can see, and this is quite interesting, that a lot of wealth will go to Hong Kong and Singapore. So the biggest wealth transfer in geographical terms will be in the two Asian financial centers. There is a lot of wealth going to Dubai, But, Switzerland is doing still pretty well, and at the moment we are still number one, and we will continue hopefully to do well. For us, at the end of the day, it doesn't matter because we are everywhere. And the US still is not doing too bad because some Asians, they go to the US, probably the other way around, they go to the West Coast, and Latin America, they still bring a lot of wealth to the US. Now, going to the next slide, you can see that obviously there is the wealth moves geographically, but the wealth moves also across generations, and this is a major topic. And also there is a lot of, for example, women will become more and more important in controlling financial assets. There is a lot of talk about next gen. Obviously, we talk a lot about next gen, but very often a lot of our clients are over 60, and very often the next gen or the next in line is actually the spouse. And very often, this is almost mathematical. The spouse takes the money and goes somewhere else because she is being neglected for a long time by the financial advisor and by probably also the person that was managing the money in the family. And this is a big topic. And obviously, next gen, the heirs and the entrepreneurs. These are different archetypes of clients that are emerging, and this is all about the great wealth transfer. The talk is in the next 25 years, $84 trillion will move across generations. The baby boomers are retiring, and the next generations are taking over. Now, where do we play in terms of financial centers? If we go to this page, I don't know if you can read it, but basically it shows that these are the 7 most important financial centers that you have here. And what is interesting is that Switzerland, and to a certain extent Dubai, are quite diversified, so they attract the wealth from all over the world. While Hong Kong and Singapore, obviously, this is the pink salmon color, obviously they are very strong in their regional, in Asia Pacific. But if we go to the next slide, you can see here, this is the ranking. I love rankings, I'm quite competitive. I like sports, and these are the rankings. We're still number one, Switzerland is still number one, but according to a consultancy firm, Hong Kong is going to become number one in the next few years. The good news about that, I realize that, I'm sorry. But, and I was going to give you the assist. The assist is that they have predicted this for the last 10 years, and they have missed that. So you can be reassured about that. But the point I want to make here, and again, I don't know how many of you are following what's going on between UBS and Bern and Too Big to Fail and the FINMA and all this context. The competition among financial centers is very, very strong. It's really fierce. Sometimes in Switzerland, we believe that the fact that we have a very strong financial center is given by, c'est donné par Dieu, is given by God, and this is not the case. Here, if we want to remain on top, we will need to be very competitive because Hong Kong and Singapore, the US, the UK, and Dubai in particular are very, very strong competitors. And again, at the end, it's a matter of choice. We are going to follow where the clients will go, but obviously then, people will move, and also the tax revenues will move. Now, in terms of the competitive landscape, about the there's a bit of promotion again. This was the article that it was mentioned earlier. In Switzerland, if you include UBS, which is also obviously is one of the biggest wealth managers globally, but is a universal bank, these are the 10 top Swiss private banks. We are about 8, and as you can see, UBS is in a different liga, and everybody else is between 100 and 500. The good news, or the interesting part, in Switzerland, there are over 80 private banks. So here are 10, and you start already being below 100 billion of assets under management by number 10, there are another basically 70 that are much smaller, and there is a majority that are really, really small. So the sector is quite interesting, but probably the big debate is always, are we going to have consolidation? We'll talk about that in a minute. Next slide, I will go very briefly. What is interesting is that as you can see, there are different leaders. It's not that there is one dominant. Obviously, UBS is strong in Europe and in Asia, less than in US. The Americans are strong in the US, less in Europe and in Asia, and it is a very dynamic business. Coming back to the next slide, 30 seconds just to say about the Swiss private banks. As I was mentioning, we are number 8 in Switzerland, but we are number 4 or 5 in Asia. For us, Asia is extremely relevant because the wealth creation will happen there. Now, what have we done and how have we done it? So if you go to the next slide, obviously we are listed, so I need to start from the stock price, and obviously the total return, the total shareholders return since 2019 was 367%. Maybe Nvidia was better, but in Swiss francs, given also the average dividend yield of 4-5% was not too bad. In the last 3 years was 156%. And we don't have time, but we have applied what one of our major institutional investors told us back in the day. Is also a Led Zeppelin song. It's called Stairway to Heaven, and basically his mantra was focus on the stairway to heaven. I said, what the hell is that? And he says, you need to focus to increase your earning per share. If you increase your earning per share, your multiples will increase. And if you look at this number here, our P ratio was 9 in 2019 when we started. We went to 11 in 2022. We went to 15 when we did the investors update. And now it went up to 18, which is, I would say, pretty good. But basically the concept of stairway to heaven is if the EPS grows, the PE will grow, and then you have this fantastic growth. Let's hope that is last. Obviously, we have had, you can go to the next slide very quickly, we have had a lot of recognition. We can move on. Now, how did we do it? And I know that you guys, and you know, I'm almost embarrassed to say how we did it from a conceptual standpoint because it's extremely basic. I'm sure that when you study strategy and execution of the strategy, it is much more sophisticated. But basically, in 2019, we were coming out of the integration, which was very, very painful, and we had a choice. And the choice was either we continue to, by the way, the market was saying that we were doomed and that the integration was a disaster and that, we would not, basically we would stagnate. And so we decided to focus on growth, and we decided to focus on sustainable and profitable growth. For us, the key element is to generate net new assets. This is what the industry called them. It's basically new wealth, new assets coming over. Is then translating this growth into profitability, which sounds obvious. You want to have a top-line growth only if it generates bottom-line growth. But then we did a lot in transforming the bank and use some of the profitability to transform the bank, and this is a constant. It's not one project that you do and then you stop. It's the Kaizen, Japanese Kaizen concept that is continuous improvement. But obviously, I'm originally from Italy, and I like sport, and in my lifetime, now it's different, but in my lifetime, we want to work up in football, and we won them because of defense. And obviously, for us, maintaining a low risk profile and the risk balance sheet was extremely important. Our business is very simple, but if you don't manage the reputational, the money laundering risk and the credit risk well, this can be fatal. So if you do that, then you generate attractive returns. This is still the number of the day of the Investors' Day, as you've seen before. It is better. Very quickly, otherwise we'll stay too long. Obviously, my partner in crime is Dimitris Politis, and he is CFO and Deputy CEO, and we both have our preferred chart. My preferred chart is this one, because when we started, we were bleeding assets like there is no tomorrow, and everybody was telling us, you are doomed, and you have no value proposition, you will not be able to grow any longer. And then, as I said, in 2019, we said we are going to start sustainable and profitable growth, and we have been growing. And what is interesting, we had 83 billion of assets under management 10 years ago, and now we have in excess of 184 billion. It is much better to say these numbers in US dollars, because now it would be around 230 billion given the strength of the Swiss franc. When I started in 2012 here as CFO myself, we were at around 70 billion, so it has been a pretty good ride. How do you grow? If we go to the next slide, fundamentally you have two choices, and I think, Claudio, what's the expression when you say both? You know, the choices are either you grow organically or you grow unorganically by M&A, and then we decided to grow both. And to grow organically, you need to hire bankers, and you need to make sure that the bankers are successful and that the productivity of the existing bankers improves year after year. And obviously to do acquisitions is an art. After my period in fixed income sales, I went into corporate finance, so I love M&A. But you know, M&A, unfortunately, you cannot plan it. You can plan organic growth, you cannot plan external growth, and this is why we had a 5-year of actually no acquisitions. Last year, thank God, we made another 2 acquisitions. Now, the favorite chart of Dimitri, being the CFO, is obviously the next one, which shows that profitability, not only we were bleeding assets like there is no tomorrow, but we were also losing money. And then we managed to have a 30% CAGR in terms of net profit in the first cycle, 2019-2022, 20% in the cycle that we just finished, 23 to 25. I love 15% CAGR because, you know, over 5 years with 15% CAGR, you double your business, you double the profit, and that's good. How did we do this? Next slide. We are obsessed. We have 2 obsessions. One is NNA, net new assets. This is how the journey starts. And the second obsession is operating leverage. Operating leverage, basically, in very simple terms, means that you need to grow your revenue faster than you grow your costs. And we have a golden rule that says that your revenues need to grow double the rate at which you grow your costs. So if unfortunately, we are not in the tech industry that grows 20% revenue per annum. We grow revenue by, as you can see here, between 3 and 9%, let's call it 6-7%, so our costs can only grow 2-3%. And we managed to have operating leverage every single year, even in 2020 when our revenues plunged because of COVID and interest rates went down to 0. And we managed to cut costs faster than the decrease of the growth. And this is something that is not by coincidence. This is something that has nothing to do with strategy. This is something that means that every single day you try to play to grow a bit more the revenues and keep the costs a bit under control. And then the so-called jaws open up and delivers the 30, 20, 15% CAGR in terms of profit. I will go fast now. We use a lot of money, if you go to the next slide, to transform the bank in terms of improving our client proximity, our client engagement, our brand visibility, our content innovation. If there are questions, we'll come back. Next slide. The key point for me in terms of executing the strategy, because when you have a strategy that works, and more or less we knew by 2020, 2021, we knew that the strategy was working, then the question is, how do you execute it? And people, for me, is the number one factor. And we invested a lot. We like to work with people. I was saying that we have becoming one of our core competencies doing parties. And so I think that in the last couple of years, people felt pretty good. And we invest a lot in people. Next slide is again about defense. Regulatory compliance and risk management are prerequisite to growth. Many people believe that business is one thing and then you have compliance and risk, which is separate. No, we believe that the foundation of growth is actually having a very, very strong defense. My hobby is sailing. I sail mostly in the Aegean, and if you want to sail in the Aegean, especially in the summer where you have very, very strong winds and very, very strong storm, you better consider that risk management is a prerequisite to go sailing and have fun. Otherwise, you end up in a place where you don't want to be. And obviously, financial and operational resilience are extremely important. So at the end, this is a slide we showed the market. We managed either to meet or to beat all the targets that we had, and as I said, the reception of the market was pretty good. Now, where do we go next? Next slide. Well, we want to try to do the same thing again. A lot of investors told us when we asked, what do you want, what do you expect, how should we position the next cycle? They said, you got to be boring, which, it's a bit of a contradiction when you just said that the core competence is doing parties. But this was in the positive sense. Boring in the sense of being predictable, no surprises, every year being very consistent, show that, year after year, you are able to manage, irrespective of what's happening around you. And again, our target for the next 3 years is to achieve 15% of CAGR in terms of profit growth and 20% in return on tangible equity. I'm very proud of the 20%. Hopefully we need to achieve, minor detail. But when I started in 91 in Deutsche in Frankfurt, the target was 25% of return on equity. And then after 2008 and Lehman Brothers, all the analysts predicted banks will never deliver any more than 20% in terms of return on tangible equity and return on equity. Hopefully we can do that again, but it took a long time. Now, obviously every cycle is different. If we go to the next page, and we will try to build on our strengths, clients, content, and simplicity and technology, continue to be very strong in defense, but obviously focusing on branding, commercial excellence, and technology. If we do that, we will continue to deliver a value creation. We can skip, I think, the next page because it's about the value creation. We can move on. Also, we can move on from this slide. This is about the next gen. This is becoming extremely important. We kind of debated that. And for the next gen, as I was saying, is not only about focusing on the clients, but it's all an ecosystem around it. Client preferences are very, very different. We can discuss if there are questions later. And obviously, the next slide, which obviously the market was able to buy, was that we can go to the next level because we want to have the augmented client relationship officers. So not only we're going to have the client relationship officers with a strong team around, but also with a lot of technology. We can debate about that. Now, I wanted to have a few thoughts. If we go next. No, the one before. So a few thoughts on leadership in uncertain times. I think this is quite interesting. And this is page 42, the next page. To close, this is a slide I presented on the 25th of November. And this is a slide that I said, okay, but what did I think? This was our third Investors Day, before the previous two Investors Day. And what did happen? And what did we do? So 2019 actually was not a bad year. Although the yield curve was inverting, which is usually not a good sign, and Brexit was a mess, but it was not a bad year. Now, for us, irrespective of what was happening, we needed to restart the growth in terms of net new assets. We need to start it again, the hiring of new CROs. And Switzerland, which is our biggest region, was in trouble. We had to do the turnaround. 2022, 12th of October, And by the way, at the end, that cycle, turned it around completely different than what we expected. Because 2019 was a good year, 2020, 2021, a disaster with COVID for us. Yet, we never, for us to achieve these three targets remained irrespective of what happened, irrespective of COVID. 2022, we thought that the world was in a very bad shape. You still had COVID, you had the fastest global rate hike cycle that for us was a disaster. 2022 was the worst market in recent history, both for bonds and for fixed income. For us, what was critical was content innovation, digital acceleration, and people. And then at the end, actually, 2023 and 24 and 25 have been fantastic years. And then now, obviously, the situation, you know better than I do, is quite uncertain and volatile. We have decided to focus on branding, commercial excellence, and tech. Why I'm saying this is because, and maybe you can go to the next slide, in leadership and management, in this environment, you need to consider that uncertainty will be there forever. Every year is uncertain. Unfortunately, the 90s are gone. The 90s was the golden age, everything was predictable. Now, since 2008, at least in our sector, we have a crisis after the other, and to become, to have this ability to manage through uncertainty becomes very, very important. The next slide, and then I close. These are the key principles and leadership principles that we have been using in a, I would say, very consistent way to manage our company. They are kind of in a sequence because I started with people, leadership, and governance. I am a great believer of people, leadership, and governance, and they go together. Because strong leadership without governance, well, I will not comment about recent events. Governance without leadership becomes bureaucracy. So you need to have all three components, and leadership and governance without people, you go nowhere. Now, you need to have a clear strategy and a clear vision. This is much easier said than done. You have to have a strong culture that for us was extremely important, especially when we came out of a very difficult period. And then obviously we are obsessed in setting targets and trying to achieve them, irrespective of what happens. I already mentioned about constant transformation, and then people and judgment. For me, if you would ask me what are the two key attributes that we look in people when we hire, is about ownership, which means accountability, and judgment. And then obviously you need to focus on the stakeholders. Now, I will close here. Maybe we can go to page 46 just to close. Our purpose is very simple, is to create value. And this is for today and for the future. And we want to empower entrepreneurial minds. These are clients and these are our people. And then obviously we have the aspiration to become the bank of choice, the private bank of choice for generation of clients. And again, we are starting the new cycle. It's going to be quite exciting, hopefully. And obviously we want to become on the top of the top three possible, not maybe in terms of size, but in terms of quality in private banking. If I go back to luxury, you might know that obviously LVMH is the biggest in luxury, but Hermes is probably in terms of quality and in terms also of market cap is probably even better. So this is a bit what we are trying to do. I pause here. I apologize if I went a bit long, and I'm happy to take questions.
That was an impressive presentation. It was entertaining, but it was also quite insightful. I never thought about wealth management as a business of intercepting assets. That's a word that you used. And it's actually interesting to see how wealth is moving, right? It's not moving because of EFG. It's moving because of global insecurity. It's moving because of taxation differences. It's moving because of a lot of people that are making money where it's being created actually don't want to live there, and they move away. China is a famous example. So there's a lot of wealth being created in China, but Chinese entrepreneurs, if they can, they want to leave the country. So it has also to do with geopolitics and the role of governments in those countries. You showed clearly that Switzerland will continue to play a large role. And Switzerland obviously lives with a long tradition of this business and therefore has a lot of credibility. And it's interesting to see, and it's very, we owe you congratulations. The development of the past years has, been nothing but spectacular. Knowing you don't take it as a given.
No.
And I think you will continue to obviously focus on trying to make this happen also for the future. Now, as you think about the banking market, there's a lot of discussion now, for instance, about UBS leaving. What is the role of the regulators and the governments in maintaining this? Because as we saw, it's a geopolitical business. It's not so much it's not a strategy issue. A lot of this wealth movement is created by governments. Italy, changed its tax laws, and while it looked good in the past few years, it's not likely to look good in the next few years. So how do you, deal with the Swiss government, and how are you trying to shape those conversations that they understand how the world actually looks? Because we tend to look at a market from our own perspective and we kind of take it as given, but if you look at the global situation, it's unbelievably mobile.
Yeah, no, that's a very good question, and obviously it's not simple, but maybe just one comment. And we went very fast, and apologize, maybe there was too much stuff in the presentation, but usually when they ask someone like me, what are the key stakeholders, right? You always say clients, shareholders, employees, and the communities where you operate. These are the typical four. I added one, which is regulators. For us, regulators are stakeholders. They are very important because if it's like a referee, right? If you don't behave well, you get a yellow card and maybe a red card, and then you cannot play. You need to skip the next 2 seasons, and that's not good because we like to play every match. Now, the regulators, on the other hand, have a major role in playing to support the financial center. Now, in Switzerland, the debate is a bit complicated. Switzerland is still is still in the grieving cycle, at least this is my perception, of the debacle of Credit Suisse. And therefore, the focus is mainly on stability and regulation. While the world, starting from the US, but even the EU, the US, they call it deregulation, in the EU, they call it simplification, is going the other direction. On this, there is another element. If you go to Asia, HKMA, which is Hong Kong Monetary Authority, and MIS, which is Monetary Authority Singapore, that are the regulators of the 2 financial centers, they have 2 mandates. One is stability, and one is development of the financial center. FINMA in Switzerland does not have the second, it's only the stability. And therefore, this is what I was mentioning before, the development of the financial center is a bit orphan. Obviously, we know, and we were debating earlier, that Switzerland has a tradition of not having, I would say, top-down strategic visions implemented top-down by the government. Is much more a bottom-up, decentralized countries with the cantons, but also with all the economic agents to develop the commercial strategy. We will see. Clearly, I think, and this is, I'm chairing one of the 2 private banking associations in Switzerland. Obviously, what I'm trying to, and we are very aligned with the other one, so our voice is to say, guys, let's open the eyes because the competition out there is very strong. So to have a Swiss finish not necessarily is the right answer because we need to look at the competition outside. So lately, geopolitics, regulations, tax developments is extremely relevant for our business.
Okay, cool. So let's open it up. I mean, you heard the presentation. It's to me, it was eye-opening. I wasn't aware that there was so much movement of capitals around the world. You know, to some extent, it's actually, you know, you see the opportunities that wealth creates for those individuals. It's sometimes a little bit sad that it's not reinvested in the countries where it's being generated, but unfortunately it is what it is, and that basically creates this global, you know, mobility of wealth. Any questions you would have to Giorgio? Zen.
Yes, my neighborhood. Thank you for your time. I have two questions. A bit thematic, both of them. First one was, I'm not sure if you follow the markets, but NASDAQ recently announced that they would be moving to trading for 22 hours a day. That coming through, how will that impact your business? Because you mentioned that you also offer trading products for your funds. So for me, how are you thinking of that in terms of the cost perspective? Because it sounds like a margin question, which I appreciate. Secondly, work-life balance, because then it might mean that workers to and for risk management perspective. And then the second question I have, my background, by the way, it's investment management. I was a wealth manager, so I appreciate the points made about the great migration. Some of the things we also looked at, but something that I'm not really hearing much about is how, especially diverse markets, how are you thinking about aging demographics? I would imagine most of your clientele, because you also showed that the ultra high net worth, they're about 53% of your clientele, and I would mention that to be the older demographics. How are you thinking about that? And I suppose then kind of like, you know, if you look at the Africa, which you're not really present in, Africa is projected to have the highest growth, population rather. Not necessarily the wealth right now, but in terms of long-term. So those are like two questions. I hope you get what I'm going with my question.
Okay, I'll try. I'll see. Let's see if I got the question and if my answer makes sense. Now, regarding the first question about the NASDAQ and the trading, look, I mean, the beauty of financial services for me is that it is finance, which is intellectually very stimulating in my eyes, but is a lot of tech. And obviously in the last 20 years, if you go back to the 80s and the 90s, financial services were at the forefront of the technological developments. Obviously, in the last 2 decades, we were a bit behind. Now we are trying to catch up. I think in the next 10 years, it's going to be incredible, the development in technology for financial services, and this is what we are going to try to invest. Now, for us, it's not a matter of cost, it's a matter of being at the forefront, or at least not to be too much behind the technological development. Now, there is a lot of talk about fintechs, and a few years back, people were saying fintechs will take over banks and banks will die. The truth of the matter is that fintechs, they do extremely well one part of the value chain. So if today you want to do FX movements and you want to do only that, probably you go to a company called Wise, which is a fintech in London, and this is much more efficient than coming to us. But if you want to, and probably if you want to do, online trading all day, you probably go to interactive brokers, and this is more efficient. But if you want to manage the financial affairs of your family and corporates, a lot of entrepreneurs still don't have clear distinctions, and you need a bit much more holistic cross-border, across countries with real estate, trust, and so on and so forth. Then obviously a good private banker still makes a lot of difference. So coming back to your first question, for us, we are not a trendsetter. We just have to follow, and hopefully follow as quickly as possible. But we are followers in this. Regarding the first part, the second question, which is about the great wealth transfer, for us, this is this is at the forefront of our strategy, because today, if I look at our demographics, both in terms of clients and in terms of bankers, the majority is 50 plus. And, we all think that we are 30, but we are no longer 30. So when you have
They are.
but our generation no longer, we still feel. But, when you have to interact with the next in line of a major clients, you better have the person of the right generation. So for us, which is a change of strategy, because our strategy was always to attract seasoned bankers. Now we went, and there is a slide, we went to the different, we continue to attract seasoned bankers, but we are going to form much more, we call them the next-gen CROs, the next-gen bankers, in order to make sure that we can attract, first of all, we can retain what we have, because the big risk is that the next gen will take the wealth away, the assets away from our bank. But also, obviously, we're relatively small. There is a lot of next gen out there, and statistics say that 70%, when there is a succession, 70% of the assets, they leave the bank. So, we hopefully do a good job in retaining, but we're going to be very aggressive on trying to target the assets of the other institutions. Now, regarding Africa, we don't have a physical presence, but I can tell you I was in Dubai and we had a client event. They are all investing in Africa, and for me, Africa is a fascinating opportunity because, as you said, demographics are fantastic, and the continent is incredible, so a lot of opportunities. And geopolitically, if Europe wakes up, they will realize that they better wake up. Yeah.
Okay, let's go there, and then we go to Luke, and then we go to you.
Thank you so much. My question is on the next gen of the CROs. So my understanding is they're very central to your business. What is your estimation? How is technology going to enhance, transform, maybe make the CRO experience even more efficient, faster? You can make that.
Vado avanti, dietro.
Indietro. No, look, I believe that technology is fundamental. I think, and that's why we talk about, is the slide that says augmented CROs, if you go back, this one. So when, 30 seconds to go back, in 1995, when this so-called CRO model was introduced, the concept was that the best person to deal with the client was the client relationship officer. And in those days, the client relationship officers, we're talking about the mid-90s, every client relationship officer thought that they were Warren Buffett and they didn't need anybody else to tell them what to do. So it was what I call a lonely cowboy that was going and acquire clients, maybe had another partner, but that was it. Then we realized that clients are becoming smarter, financial information is much more available, and then we put a team of investment counselors, credit specialists, asset class specialists, and wealth planners around that. And this is something we did in the last 5 years, because today, when you need to talk with a family that has branches in the family in 3 different countries, complex structures, and so on and so forth, you need to have the best specialists at the table. Now, this is still necessary, and we will continue to invest, but it's not sufficient if you don't have the tools. And this is why you can see here that 1, 2, 3, 4 will be new tools. The Aladdin Wealth is basically a BlackRock tool, which is the standard in terms of advisory and investment advisory. So we're going to introduce that this year. And at the end of the day, it's that's why we call it augmented CROs. We do not, at least in our sector, maybe in retail banking, in a few years, the client will no longer interact with the person. Already today, you interact with the machine. In private banking, the wealthy clients, they want the experience, and luxury will be to have a human serving you. So this will remain, but if the banker doesn't have the tools, will no longer be competitive. I'm sorry, I'm using a bad metaphor, but it's like going to war with not the right tools. If you go to war with the wrong tools, you're not going to win. So this is why technology is going to change. But in our business, the banker will remain the central figure.
Luca, you had your hand up.
Thanks for the talk. My question runs back to the lengthy adjournment. So bear with me, sorry for that. I started LinkedIn and I saw that you spent 5-ish years at Deutsche in the new strategy called that. I was wondering two things. First of all, how did that time in sort of a strategy of setting shape you towards the C-level career? Because we do it a lot with strategy here in the course, as a Jeffer's class, obviously. And then secondly, why do you make that move as opposed to staying at, say, one of the business areas and business units of Deutsche, say, wealth management or retail banking?
That's a very, very good question. So the first answer is yes. I think that the move to AFK, as it was still called, I think, Abteilung für Konzernentwicklung, which is Group Strategy and Investment, was for me fundamental to develop my career. Before, as I was saying, I was actually in trading and sales, which in those years was actually the core of the bank, and actually my boss, who I liked him very much, he said, "You are crazy to leave trading and sales, where you make much more money than going to a group strategy department." The reason why I did it is because, I don't know, I liked, it's a personal thing, right? He was super successful, super wealthy, enjoying great life. But, I was 28 at the time, 30, something like that. 28, it was, 95. And he had a bunch of young people like us, but, and it was great. It was a lot of fun. It was even more fun than today. But to me, as at the end of the day, I like this idea to drive something, to manage something. And this is, for me, was a big decision, or a big question. It was not a big decision. It was a big decision, but it was a big question in my mind for many, many years. Do I want to be a specialist? Do I want to be an advisor? Do I want to be somebody that is, the best at this game in a very specific topic? Could be sales, I became a finance person afterwards. Or do you want to be a manager that maybe is, I'm the least competent in anything of all my team, to be very blunt. But, at the end of the day, I take the decision. I try to drive the business forward. I have a budget. I'm competitive. I want to achieve the budget. I want to drive the share price. This is a personal thing. And it took a long time, by the way. It took a long time. But already then I realized, I to do another 10 years of sales, probably I would be retired 20 years if I would have done that, because, that was the reason.
You have a question?
Yeah, maybe a bit of a provocative question to finish things up. You mentioned that there's a whole lot of consolidation going on in the market, banking market. Would you like to give us a bit more insights on what happened in 2024 when there was a whole lot of rumors that UNI-SG was going to buy you?
Yes. So what version should I give? The
rumors
official version?
The rumors one. Well, whatever you can disclose.
Oh, of course. Well, first of all, basically almost everything is being disclosed, and the consolidation. Look, let me give you. So let me try not to answer the question and give you a very long answer. So consolidation can happen only in basically three ways. Is a bank of the top 10 like us buying a smaller bank, which we have done. For example, last year we bought Cité Gestion, which is a bank in Geneva of 7.5 billion, which we bought, and UBP. The second is what UBP did is you buy the private banking division or business of a major bank. They bought the SocGen business in Switzerland and in the UK. And the third is that you have the consolidation of the top levels. Now, if you look at the chart and you exclude UBS and you exclude Julius Baer, all the other, and you add LGT on top, so all the other 9 banks have a family. And this probably you know or you will know. To get already within a family is not always easy. When you try to get 2 of this kind of family together, it's basically impossible. So the consolidation at that level is going to be very, very difficult. Obviously, Julius Baer doesn't have a family. They are an institution, a public company. So if you go to London and to UBS in the investment banking division, they will tell you that the best deal is Julius Baer with EFG, Julius Baer with another bank, because, in terms of governance, it's much easier. Now, 2024, as the speculation was saying, obviously there were discussions. Unfortunately, nothing happened. If you read the fine print, you will figure it out why. At the end of the day, we have been doing pretty well. Julius Baer is in a different side of the cycle, but they have a fantastic brand. They're a fantastic competitor. They're obviously 2.5 times bigger than us. So for us, it's a good, it's a good big brother to look at and trying to catch up with. So, but we will see. Consolidation might happen.
Michel and then Lucas.
Thank you so much. Fantastic presentation. I was intrigued by the clarity, but on the other hand, also simplicity, if I may say, of your strategy, in particular the revenue earnings draw, as you call it, right? And I would really like to understand that a bit better. How exactly did you manage that? Because this requires a very, very good view on your costs at a level that you probably must have developed somehow. I cannot believe you had it also, right? I think cost management and category management is key here. And secondly, how does this square up there with your CRO when you say we don't have any targets? And how do you then make sure that they don't blow it up?
Yeah, no, that's a very good question. Actually, yes, indeed. I think for us, what is this now? Oh, yeah.
Quello che ti metto?
The one with the 12, I think is a dopo. Next. Okay, here. So first of all, the first thing is mindset. The tools are extremely important. Without the tools, you do nothing. But if mindset is not right, the tools are not going to help you. So obviously, we figured out that our strategy was pretty good. We had a lot of good people that helped us with that. The culture was pretty good. Then we are obsessed in setting targets and forecasting. And we are obsessed in, obviously we set targets, in doing rolling forecasts.
Okay.
Many people say budgets are something of the next millennium, and you only should do reforecasting. We do both. We do a budget and we continue to do reforecasting. But what I always say to everybody is, because at the beginning when I was saying we need to grow, but we need to cut costs, and we need to be good in compliance and risk management, they were telling me you're crazy. I can do only one thing. And my answer was, if you can do only one thing, I'm going to buy a computer and it's going to be better than you. Because the only reason why we are paid pretty well and we have the position we have is because we can manage competing priorities. And obviously, and my metaphor was, can you walk, chew gum, and speak on the phone? Right, which is what in my country everybody does, right? You walk and you speak on the phone, you chew gum, so 3 things. So grow, manage cost, and keep compliance and risk management under control. Now, and I always say, if you want to have a long-term success, you better hit the short-term targets first. So we have an obsession in making sure that we hit the targets. Now, in order to do that, you're absolutely right. We spent the last 10 years, actually, because the head of planning and controlling, Dimitris Itsanis, was fantastic, joined 10 years ago, and we can track anything. And like an old boss of mine used to say, when you can track anything, you are naked. And if you're naked, you can run, but not hide. And so we have a lot of people running, and because they cannot hide. So
You developed this?
we developed that. We developed that.
Oh, like,
Well, we developed that. The EFG way is you start with what you have. We started with Excel, which is the best system in the world. And then once we figured out what we wanted, then we did it in an institutional way.
Very good thing.
But and the other mantra that we have is that anything is a business case. So you want to do a new initiative. You want to No, we set up Dubai in 2019 with zero. Today we have $7 billion. We have the business plan. We track the business plan and the business case every single quarter. We want to hire bankers. Every new banker is a business case. Life is a business case. And when people tell me, oh, we cannot estimate, we cannot, it's imponderable, I says, well, then you have no business case and we're not going to invest. And then suddenly numbers start coming. So.
Good. So the importance of the DCF. Let's do Lucas, the new, and then I think we slowly. Okay, we'll do one more. So let's make the question quick.
Yeah, and I'll give a quick answers.
I'll give a quick answer. Then you, and then we close with you. Good.
So my name is Lucas. I'm a psychologist in banking and consulting, and I found the concept of the CRO very interesting. It's a client relationship officer. And you said about, you mentioned ownership and judgment are things you pay attention to when you hire. Could you tell me whether that's specifically for the CROs or other roles as well? Why that is so important and how do you assess that?
Very good question. No, it is important for all the roles. Ownership, which is basic accountability, is one of our 5 values, is extremely important. If somebody doesn't have accountability, doesn't feel accountable for what his responsibilities are, and it doesn't have ownership, and ownership, you can say many things, is like feeling like a shareholder or feeling like an owner. If you don't have that, then it's very, very difficult, because how can you drive something forward if you don't feel it your own? And for me, that's extremely important. And judgment is extremely important because competence, obviously, is fundamental. It's fundamental. If you don't have competence, it's a necessary condition. But in difficult moments, when you need to take a decision, and the decision can be big, but can be also relatively small, like, will I, engage with this client? Which, bankers, CROs do this kind of decision every single day. If you don't have judgment, then this can create a lot of problems because, the risk element, the reputational element is very important, but judgment is in everything. And to be fair, actually, the person, when I was hired when I left Deutsche, because with IFK, we bought 10% of the Greek bank. Deutsche Bank bought 10% of the Greek bank. I met the family, and the person that became a mentor and hired me, and at the time I was 35, he told me, it's important to have good judgment. And I said, what's that? So it's not immediate. It's not easy to put it in a box. So when you hire somebody, it's, you don't have a checklist. Does he have good judgment? But with experience and you realize, obviously, I'm a bit more superficial. Some of my colleagues are much more strict and do business cases. They do all possible cases, and they realize if you have good judgment. But at the end of the day, and I finish, apologies, is about decision making, right? Do you have good judgment in decision making? Decision making is a science, but is also an art. And at the end of the day, you need to have that judgment, because at the end it's a call, right? You go for it or you don't. It's binary. It's not, right? It's 50% probably. No. Either you do it or you don't do it. And that requires judgment.
I did not plant this one. It's obviously the title of the last book, but I didn't plant this. So
my name is Father Peter. I'm a senior in banking and finance, and I have a question regarding the next-gen CRO model working for EFG. So I've seen in your Investor Day presentation that the average CRO is above 300 million asset under management. And also you're putting quite strict targets on your CROs, that you also see the CRO retention rate, how many CROs are left, who was a good hire and who wasn't. And so I have many friends, but I don't have enough friends that can trust me 300 million Swiss francs right now. And so I would be curious, what is the career trajectory at EFG if you start off as a joiner?
We can have a discussion offline. First part of the answer. Second part of the answer, no. Usually the next gen CRO joins the senior CRO, build a team, and also the idea is that over time you build the book, and then when the senior CRO will retire, you will get the book. So it's also about succession within the firm. So you don't need to have 300 million day one. Don't worry about that.
So basically, I have read that with the private banking financial service, one of another big trend is the AI technology. And AI will change the financial banking, I understood it to change like everyday banking. So with personalized products. And in your presentation, I have not maybe heard clearly about your strategies. So I think this will also change the demographic cost of the consumption behavior, because your client will have very detailed information on the AI and come to you. And I understand client relationship is also your core strategy. So maybe can you share your insights, how you position that?
No, you're right, but since you managed to access the Investor State presentation, in the Investor State presentation, which is on our website, there is a chapter all about technology and obviously AI. I think this will change completely the way we're going to work. For us, AI will be fundamental in client experience. So this is how, basically our offering will be given to clients and will be fundamental to improving the processes and making, speed and efficiency much higher. I think that for us, and is going to change compliance, because obviously with the AI, you're going to have a clear screening about the client, social wealth, and all these nice things much faster. So it's going to change. Maybe given in the interest of time, I refer to the presentation. And if you want, you can send me an email and we can talk about that. Right.
Excellent. I think we're running out of time, so I think we need to call it the evening. To me, it was unbelievably interesting to see this industry. Interesting also to see the unbelievable and impressive development over the few years. I obviously, haven't been following as close since 2019, and in 2019 the situation looked very differently, and it's pretty impressive how the development has gone. And I would like to thank you for having been here. This has been a big privilege for us. And so those that do the banking elective, we have a banking elective. I think about 20 people have signed up for the banking elective. It will be in Zurich. And it will include a visit to EFG, and those that have chosen that elective will meet Giorgio there. So if by then the question is not answered, then you can still have an opportunity to ask it there.
I'll bring the chief operating officer who knows much better the answer.
Okay, very good. One of the things that I liked about your conversation is the following. There was recently an article in Science, which was a study about long-term development and long-term progression of individuals. And what makes the difference? And it was a question about specialists versus generalists. I think you made the point very nicely, and I think you demonstrated it with your own career. Over the long run, generalists win. So if you look at the career progressions over the long run, generalists win. They develop much more strongly, not at the beginning, later on. So, you also mentioned this question about patience, and maybe you would have retired a bit earlier. Maybe not, right? But I think this element of generalist is element of having judgment, where your value is not so much the specialist knowledge, but being able to balance different things. You made it in a very humorous way, talking on the phone, chewing gum, and walking. But the point is about juggling different perspectives, having different competing priorities that you're trying to reconcile and balance out. That requires experience, requires judgment, it requires an ability to think broadly, not narrowly. And in a way, you were almost like doing an advertising for, why it's important, the type of education we're doing here, where we don't focus so much on depth, we focus on having a good understanding and a solid understanding of all the, if you so want, disciplines, but then being able to juggle, be able to integrate, to see different perspectives. And that's what we, for instance, try to teach when we do decision making. You can look at a problem from 5 different angles. So how do you look at it? How do you integrate? How do you then make decisions? And so that was very, very helpful, and also bridges, I think, a lot to the curriculum that we're trying to build. So with that, I would like to thank you. I would like to thank you for participating.